Everyone, today we are going to talk about a TikTok trend that we've been seeing about writing your car off. So we've had a lot of questions of, is it better for me to lease or buy my vehicle? How do I write my vehicle off in my business? Should I start an LLC to write my car off? We've had a lot of questions regarding how to write your vehicle off, okay? So I'm going to talk to you today about those TikTok trends, those TikTok things, and what the actual truth behind those is. How it works, and some are just plain not right. So I'm going to help you kind of avoid getting in trouble for that, and talk to you a little bit about business use of your car. So the TikTok trends that you may have seen are things like you should lease your vehicle, because if you lease your vehicle, then you can write the whole entire thing off in your vehicle or in your business. Okay, so I've seen that one where it's like, go lease a vehicle and then write it all off. So there's a couple of things wrong with that theory. Okay, first off, you can't just lease a vehicle and just because you're a business owner, you write the vehicle off. Doesn't work that way. Okay, the vehicle has to actually be used in the business. So if the vehicle is 100% used in the business, it's not a personal vehicle, it's 100% used in the business, then you can potentially write the lease payments off. There's a couple of catches, a couple of different things that we need to talk about. First off, it can't be used for personal purposes if you're writing the whole entire lease payment off. It has to be used exclusively for business, okay? And this makes sense. Like if you have Apple, for example, may have a vehicle and their employees may drive around in that vehicle, they're gonna write that vehicle off. That's an expense to them, okay? Same concept applies to small businesses. If you have a vehicle that you're leasing, it's used exclusively for businesses. And if it is a true lease, it most likely qualifies to have that lease payment written off, okay? Now, when I talk about a true lease, that's one of the things that is kind of a catch here, okay? So we've established that it has to be completely used in business for the full amount to be wrote off, okay? Now there are instances in which a vehicle that is used in the business but is also has personal use can be written off. I'm not talking about those right now. I'm talking about the vehicle is used 100% in business, okay? And you're leasing it. It has to be a true lease. What I mean by that is sometimes there are leases that are structured as delayed purchase. Okay, those aren't true leases from an accounting perspective. So you may have a vehicle that they say, okay, this vehicle purchase price is $40,000. Okay, but we're gonna let you lease it. We're gonna let you lease it for 2 years at $1,000 a month. Okay, so purchase price is $40,000. We're gonna let you lease it for $1,000 a month for 2 years. At the end of that period, you can purchase it for $7,000. Okay, if we do the math, that vehicle to purchase it is $40,000, right? You're gonna pay in $24,000 over the course of 2 years. Then you're gonna buy it for $7,000. That's a purchase of a vehicle. Okay, that's just them financing it for you. You're getting the option to purchase it for a drastically reduced price at the end of your lease agreement. That tells me that part of those, if not all of the lease payments, are going towards the actual down payment on the vehicle. Okay, so they're essentially doing like an owner finance sort of deal. Those aren't true leases. Those are considered capital leases, which is where you're actually getting the asset, you're purchasing the asset during the process of this lease, okay? So those don't count as true leases. Those count as purchases. That's a whole nother beast that I'm not gonna talk about. So let's kind of like recap what I just went over. The TikTok trend where they say, you can just lease a vehicle and lease it in your business and then you can write it off, right? Not true, it has to be for business purposes, okay? The other thing is you have to know how you are taxed, okay? How your business is taxed. I went over this in episode 2 if you didn't follow it, but you have to understand how your business is taxed in order to determine how you can actually claim that expense for your business. For example, let's say I lease this vehicle for personal purposes, but or in my personal name, but it's actually for business purposes. Okay, so I go look at this vehicle. I have a construction company. I go look at this vehicle and I say, I'm gonna buy this vehicle. It's gonna hold a bunch of our equipment. I need this truck to haul things to job sites. I'm not gonna use it at all personally. I don't wanna drive that vehicle. I have a separate vehicle that I drive personally. However, my corporation doesn't have any credit. I might need to lease it in my personal name. Okay, if I lease it in my personal name and I have something like a corporation, there's agreements that have to be in place between me personally and my corporation. There has to be a written agreement there establishing that the corporation is covering the cost of that lease, even though that lease is in my personal name. Okay, now sometimes that doesn't occur. So if you have like a C corporation or an S corporation or a partnership, that could be a cause for concern. That lease isn't actually in the business's name. That looks a little weird. When it comes to sole proprietorship, you're fine because the IRS considers that a disregarded entity. Now on the state level or the local level, maybe another story. But if you have a partnership or an S corp or a C corp, there has to be an agreement there. Okay, there has to be an agreement allowing that business to pay that lease that is under that employee's or that owner's name. Okay, so you can't just go lease a car and write it off in your business. There's other catches. It has to have a business use. If you want to write off the whole entire lease, then it has to be a true lease and it has to be 100% business use. Okay. So what happens if you go out and you personally lease a car? It's used like partially for personal purposes and partially for business purposes. Okay, it's a true lease. We're looking at a true lease, not a purchase. You can write off a portion of that. Okay, so there's a portion of that you can write off, but you can't write off the full amount because there's a personal and a business use, and the IRS expects you to divvy up that cost between business and personal. Okay, and this is covered right here in topic number 510, business use of car. Okay. So you can't just go lease a vehicle and then write it off in your business. I've also seen where there's been TikTok trends where go buy the vehicle, but buy it in your business name, and then you can write it off. Not necessarily. Again, there is still is this a business vehicle or is this a personal vehicle? If it's a business vehicle, absolutely. You can write it off. If it is 100% business use and you purchase it with that business name, that is a business vehicle. If it's being used for business purposes, okay, has to be used for business purposes. There's various ways that you can write it off, okay? So there's the standard mileage rate where there's actual expenses. Again, this is gonna depend on some various different things. Like you'll see here on the screen, do you have 5 or more cars that you're operating in your business? At that point in time, it's a fleet. Fleets can't take standard mileage, okay? Have you claimed a depreciation deduction? Do you have a section 179 deduction? All these different things, okay? But if you have a business use vehicle that you have purchased in the business, yes, that is going to create some sort of deduction if you are using that vehicle in your business, okay? Another thing that I've seen is go open up an LLC and then you can write your vehicle off on your taxes. You might not have a business, but that's okay, because if you open up an LLC, then that LLC is like your business, right? That LLC starts a business and then you can write all these things off. That's not true, okay? That absolutely is not true. First off, opening up an LLC does not mean that you've opened up a business from the IRS perspective. There are a lot of LLCs, corporations, etc., that are formally structured in a state, and the IRS that is not a business, that's a hobby, okay? And the IRS will disallow expenses from that LLC, okay? So just because you open up an LLC does not mean that you have a business. It does not mean you have a business. So opening up the LLC just so you can write off the vehicle does not work. And if you do that and you just have this LLC with no revenue and expenses and stuff, the IRS is going to see that. They're not going to like that, right? So let's talk about how you actually can write vehicles off. So we've talked about like the TikTok trends, like, oh, go open an LLC and then, write your vehicle off. Let's talk about how you actually can write your vehicle off. What does that look like? Okay, so you have to have a business first, a legitimate business, right, with a primary profit motive. So you have to have a legitimate business from the IRS perspective. And then you have to use that vehicle in your business. You have to use it in your business. You can't just use it for personal purposes. And there's a variety of different ways that you might be using that vehicle. It may be, you have a construction company and that vehicle is moving tools or equipment or supplies from your office to a job site or from job site to job site. That is a business use of a vehicle. You may have a vehicle that, I have a client come in and they want, I'm going to take them to lunch. Maybe I'll show them, I'm a real estate agent or something. I'm going to show them some different options in terms of properties that they can purchase. We're going to go over them. I'm going to take them there. I'm going to kind of take them out for the day. That is a business use of my vehicle, right? I'm doing business with that vehicle. I am taking a potential customer or a customer. I'm saying, okay, we're going to go from my office. We're going to go see this property, this property, this property, grab lunch here, and then we're going to go see these properties and we're going to discuss them. Okay. Maybe we stop by, a contractor that I know and talk to them about clearing the land on this particular property. That's a business use. As long as that real estate activity is a business, it's a business use of my vehicle. Okay. I have an office, right? I might go from my office to go on site at a client's. It's a business trip. It's a business use of my vehicle. Those are legitimate uses of your vehicle in a business, okay? Now, a couple different ways that you can write off the expenses associated with a vehicle. And I have it pulled up here. This is topic number 510 with the IRS, business use of the car. You can easily look this up. So let's talk about what this looks like. So it says first thing right here, if you use your car only for business purposes, you may deduct its entire cost of ownership and operation. They're subject to some limits, right? There's always a catch. However, if you use the car for both business and personal purposes, you may deduct only the cost of its business use. First, 2 sentences on this topic right here. If it's solely used in a business, you can deduct the full cost with some limitations. If it is used mixed personal and business, you can only deduct the cost of the business use. Okay. Now there's 2 different types of methods for determining what that expense is going to look like. You have the standard mileage rate, or you have your actual expenses. So the standard mileage rate involves taking a mileage rate that the IRS sets every year. You're going to multiply it against the number of business miles that you've gone. Okay. Now, when you use the mileage rate is assuming that is accounting for like repairs and maintenance, depreciation, that kind of thing. All right. So it's not like you can go take the mileage rate and then be like, oh, I'm also going to deduct my repairs and maintenance and my depreciation and all of that. You either have your standard mileage rate or you have actual expenses. And so actual expenses is also looking at mileage, but it's going to look at the percentage of the mileage drove on the vehicle that is business. Okay, so if I drove 10,000 miles in a year, 2,000 of which were business, I have a 20% business use. I'm going to take 20% of the actual expenses on that vehicle. Okay, so there's standard mileage and then there's actual expense method. And then there are some other requirements here. So if you want to take the standard mileage rate, you can't do it if you have 5 or more cars at the same time, like you're operating what they consider a fleet. So sorry, you can't do standard mileage, you have to do actual. So you might see this in the case of like a delivery company or, like maybe you operate a business that rents out vehicles. If you have 5 or more, it's considered a fleet, you have to take actual. You can't have claimed depreciation for the car using any other method except straight line. There's some other information here about different types of depreciation. And then you must not have claimed actual expenses after 1997 for a car you lease. Okay. So this is going to give you information about standard mileage versus actual expenses. This is how you legitimately claim your business or your vehicle in your business. Okay. Have to have a business. The vehicle has to be used for business purposes. If it's not used 100% for business purposes, you have to allocate between business and personal. Okay. Those TikTok trends, they're going to get you in trouble if you just follow them blindly. Now, there is some truth in those, right? So most of those things are going to come from like a sliver of truth, and then they're going to distort it. So there is some truth in those, but there's a bunch of different catches, right? So there's going to be information about depreciation, record keeping, how you deduct these, etc. Okay? So business use of the car, you can't just open an LLC to write your car off. You can't just go lease a vehicle assuming that you're going to be able to write it 100% off on your taxes. You have to follow the regulations for business use of the car. Hopefully that was helpful. I will see you guys in the next episode.